Welcome to this video today, which is all about the turtle trading experiment. Just gave a quick intro to it on the way in, conducted by Richard Dennis. He had a friendly disagreement with his business partner, Bill Eckhart. Eckhart didn't think that traders could be taught to trade. Dennis did. And the results of the experiment conclusively proved that anyone with the right education could trade successfully. Now, I put on the intro that they were taught to trade in 2 weeks. Well, one batch of traders was. Another batch he taught to trade in 1 week. Now, in terms of the markets generally, we all know that the majority of traders lose money, and yet the turtles were spectacularly successful. Why were they so successful? Well, you only need a simple method to make money in trading. However, what you do need is to have the right psychology. You have to be able to follow your method with discipline and not obviously deviate from your rules. Now, this becomes hard for most traders when they start to hit a period of drawdown, and it's here that you really actually have to understand that the edge that your system has to overcome the cognitive biases that we're all programmed with, which basically cause us to lose. Now, cognitive biases are within us, and when they come into our trading, they lead to disaster. What I want to do, first of all, I'm going to discuss the actual turtle trading strategy in a little bit more detail in a moment. But first of all, what I want to do is give you the cognitive biases which cause traders to lose. Just going to do a quick summary. It's only a few minutes, and I'll come back and discuss those biases and how to overcome them with a strategy, with an edge, and how to get confidence in your strategy so you can trade with discipline. So here are the cognitive biases summarized, and I'll be back in a moment. I'll get back after that short summary of the cognitive biases that come into play when we trade the markets. Now, they are part of our personalities. They're ingrained within us. They're also reinforced by society. Now, in general terms, people do not like taking risk. They do not like uncertainty. And of course, people just don't like being wrong or losing. Of course, we all have egos. Now, in terms of those cognitive biases, they need to be overcome if you want to win at Forex trading. And they can be overcome if you basically understand the reality of what it takes to make money at Forex trading. Don't believe the myths. and then you have a strategy with an edge. And it can be very simple, but you must understand the logic upon which it is based and believe in it, that it is going to return you to longer term profits when you're in a period of drawdown or you're losing. Obviously, if you actually deviate from your trading strategy, you just don't have one. You know, if you just override your rules, and a lot of traders do that when they lose. Now, in terms of one of the biggest myths about Forex trading, it's you should maximize the number of winning trades. It just isn't important. The Turtles proved this. Yeah, they lost on 70% of their trades, and yet they still made a huge amount of money. Richard Dennis, obviously who taught the Turtles, worked out over his entire trading career, and he turned $5,000 into $200 million, that 95% of his profits had come from just 5% of his trades. So you don't want to be focusing on maximising the number of winning trades. What you need to do is keep the losses small, then have the confidence to run your profits to cover them. And in terms of the turtle trading strategy, it was incredibly simple. I'm just going to give you one of the techniques now, which was what they would do is they were taught to buy a breakout above a 40-day high or sell a breakout of a 40-day low, calculate the stop and position size by the volatility of the market. Now, that is incredibly simple. Now, what Dennis understood was, just giving someone rules is not enough. You've got to teach them that the logic works longer term. And he demonstrated the logic worked longer term, so the Turtles had the discipline to stick to the rules and basically execute the strategy in the correct way. Now, he ingrained certain beliefs in them. I'm just going to show you the beliefs now. Basically, they come from Curtis Faith's excellent book called The Way of the Turtle. Faith was the most successful of the Turtles. Now, here are the beliefs that were ingrained in them and the way they were taught to think. And after we just looked at the screen, I'm just going to show you the beliefs. Just take a minute or so. We'll come back and we'll discuss more about the Turtles. Welcome back after that short summary there on thinking like a turtle. There's no question, if you can adopt that mindset, you can make money at Forex trading. Now, you notice I finished the summary with a quote there from Bill Eckhart about not doing the comfortable things. Now, if you want to win at Forex trading, you have got to feel uncomfortable. Now, if you think about the way the Turtles traded, it was a very uncomfortable way of trading. Obviously, taking small losses all the time, that's not particularly nice. Also, trying to run a big profit in the markets, and the bigger it gets, you imagine how uncomfortable it feels. You just want to take it. Also, when you're entering the market, you're coming in, let's say you're buying a breakout as a turtle, you are buying high. You haven't got the perfect entry, okay? You haven't bought the turning point. So that is uncomfortable as well. Most traders want to do the comfortable thing. So, if they've got a loss, they'll avoid taking it and just let it run, see if it turns around. If they've got a profit, they'll snatch it. Now, just think about when you're trading, feeling uncomfortable is a good feeling, and it is the way to be successful. Now, in terms of having a turtle mindset, you have got to believe in positive expectation of your system, which is obviously your edge. And you can see from that summary there, it has to be based on probabilities, not on prediction. Most traders who come in the markets want to predict. How many traders use tools like, let's say, Fibonacci or Gartley patterns or Elliott wave? They don't work. You've got to have a strategy that's based on probabilities. The turtles worked out the probabilities in terms of breakouts. That's what you have to do. It doesn't have to be in terms of breakouts necessarily, but you just got to look at probabilities and forget prediction. For example, for me, I like to trade high volatility price spikes, big moves that deviate too far from a moving average. And I know once they reach a certain level, the odds are high of a turn. Yeah, I know that strategy has got positive expectation, and yeah, I've tested it backwards, traded it for many years, so I can always get through a period of drawdown. And if I get a long period of drawdown, I know I'm going to get good trading conditions pretty soon. That was taught to the turtles as well, actually, that after bad periods, you are going to get a good period. So always be alert, always basically follow your strategies, rules, religiously. Now, I think in terms of the turtle trading experiment, it's a great one to study for beginners, because it shows you really what it takes to win at Forex trading. Now, you can get the turtle trading rules for free online, or join our mailing list and we'll send them to you. I'd also recommend you read Curtis Faith's excellent book, The Way of the Turtle. It really goes through the system in great detail, the mindset, the teachings of Dennis and Eckhart. It's an excellent read. Now, in terms of what I'm going to do now, is I'm going to finish up with some quotes. They come from Richard Dennis and Bill Eckhart. Some of them relate to the turtle trading experiment. Others just simply relate to achieving Forex success generally. So I'm going to play out with them. I hope you enjoy them, and I hope you enjoyed this video. Take care and have a good day.